For any major trend shift in the market to occur soon, we'll need to see positive changes in the short-term work first. The S&P 500 just logged its first 1% decline since September 15th, 2 days ago. We're still below this 2022 pace, but not by much. However, this time has been different in one glaring way. So with the last 1% gain happening on 8/29, as we know, we haven't seen a true rally attempt in 5 weeks. So here's an easy way to see this. So as this table shows here, 2022 and really into the first quarter of 2023 were characterized by a lot of big moves in both directions, right? This two-way volatility obviously provided whipsaws on both sides of the tape, which is typical for a bear market. And so the big moves have returned in some regard here, but they've only been present on the downside up to this point, right? And if you look at this in a slightly different way, this is now the fourth straight week that the S&P has logged at least 1% decline. So that's consistent price action, plain and simple, and obviously bearish as well. And so looking more closely at the daily bars here, S&P now is alternated between gains and losses the last 4 trading days coming in today. And so when that kind of thing happens after a big move in one direction, it could suggest indecision. And for those looking for a big positive reversal, of course, indecision can be interpreted as bullish, right? As people decide whether they want to continue to sell or obviously have a turn here near the lows. So this is true, of course, but it only can occur if traders finally take advantage of it. So again, on yesterday, it was a solid start and we had some strong participation across the board. So that was good. But as this chart depicts, other than this 4-day pop at the end of August, winning streaks have been non-existent since July, and we know how that ended back then. So really, consistent uptrends contain strings of successive advances, of course, along the way. And really, this just hasn't been happening lately. So, it appeared that the market could have been well on its way to returning to the July highs with that big August move here, but obviously wasn't meant to be. So the other side of this was that we haven't had a losing streak in 2 weeks either. Now, that would be okay, but the down days continue to be much bigger than the up days. And you can really see this on the rate of change panel here. Obvious, but extremely noteworthy. It's been driving the market lower. So really all that needs to change before we can get too excited about a day of 2 gains, because really that's been happening along the way with no follow through. And so here's another way of looking at it. These are all the winning streaks of at least 3 in 2023, along with the 3-day rate of change. Again, not surprisingly, as a number of streaks have decreased here, the average 3-day move has been going down as well, right? And so sticking with the streak theme, the S&P now is trying to avoid logging its 5th consecutive down week as well. Now, that would be the worst weekly run since 7 in a row right here between April and May of 2022. And so, like we discussed recently, it's clear the S&P is not behaving like it did in 2021, which was consistently higher almost the entire year. And lately, of course, has been more like 2022, obviously, which has been bearish. Now that said, as we know, the worst was over just about a year ago in mid-October, which we are, of course, very close to again now. So the missing ingredient, of course, we just need the dollar and rates to do an about face like they did back then. And really, this is the only chart that matters. That's what we have for today. Feel free to check out these other videos, especially this one we did with the Schwab Network yesterday, talking about the S&P 500. Thanks, and talk to you soon.